It's December of 2001 in Houston. America's seventh largest company just collapsed. $63.4 billion gone, 20,000 people out of work, lifetimes of savings wiped clean. One employee said that morning, "I went to work like every other day and came home with nothing." Wall Street wasn't shocked that Enron fell. They were shocked because no one could explain one thing. For 16 years, what exactly was Enron selling? This is the story of a company that sold a lot of things. Power, tech, the future, genius, except the one thing it claimed to sell. Back in Houston, 1985, Kenneth Lay takes two boring companies, Houston Natural Gas and Inner North, and welds them together. A new name is born, Enron. Even early on, the numbers were already huge, but nobody outside Texas cared. Lay had one religion: deregulation, no price limits, no fences. Let the market run wild. He liked big rooms, long speeches, and the sound of people nodding. Then comes Jeff Skilling. Sharp suit, fast mouth. He talked like the future owed him money. He believed in markets. He believed in spreadsheets. And most of all, he believed in himself. Skilling looks at pipelines and says, "We don't sell gas. We sell the way the game is played. Other companies sold energy." Enron sold faith in numbers, in screens, in whatever the spreadsheet said was true. And when people believe hard enough, they stop asking. By 1992, Enron isn't small anymore. It's the biggest natural gas trader in North America. Inside their offices, phones never shut up. Screens glow all day. Traders yell numbers like it's a sports bar with money on the line. Then, in 1999, they drop something shiny. Enron Online. Click a button. Move millions. Trade energy like ordering pizza. On busy days, billions of dollars worth of contracts, at least on paper, move through that screen. Reporters lose their minds. They call Enron the future. Fortune magazine names it most innovative company in America, 6 years in a row. Inside the building, the language changes. One trader laughs, "We're not an energy company anymore." Another says, half joking, half proud, "We're a tech company with gas." Truth is, they didn't change gas. They just added PowerPoint to it. They called themselves the future. Because if you stared too long at the present, it got confusing. And when someone asked the simple question, "So where does the real money come from?" they got a whiteboard, 40 minutes of buzzwords, and everyone nodded, even though no one could repeat the answer. From 1990 to 1998, Enron stock climbs over 311%. In 1997, Enron trades around $7 a share. By 2000, it's brushing 90. People start watching the chart like it has a pulse. Then 1,999 hits, up 56%. Year 2000 comes next, up another 87%. By December 31st, 2000, one share of Enron costs $83.13. The company is worth more than $60 billion. At bars, at offices, at family dinners, people stop asking what Enron does. They start asking something else. Nobody asked for explanations. They just wanted a receipt that said, "You're smart, where do I buy more?" A warehouse worker in Texas says, "I don't know what they sell, but I know it keeps going up." First, he puts in his bonus, then his savings, then money he once swore he would never touch. One guy tells his friend, "Man, this isn't investing, this is destiny." Another laughs and says, "If it keeps going like this, I'm retiring at 40. The stock rises so fast, no one has time to ask where the money comes from. They only ask, did you buy how much? Why didn't you buy more?" Back then, buying Enron felt like buying a lottery ticket, except everyone was sure they were going to win. And no one asked what losing would feel like. In 2001, Jeff Skilling takes the top job and becomes CEO. Inside Enron, a quiet rule spreads. There are no bad quarters. Not one, not ever. Every 3 months, the numbers must smile. Not because the business was perfect, because the story had to be, And in early 2001, Wall Street expects Enron to grow again. No excuses. In a meeting, Skilling points at the screen and says, "We don't miss targets. Targets miss us." One manager leans over and whispers, "If the numbers aren't pretty, we make them pretty." Late one night, a junior analyst sits alone in the office. It's past midnight. The building is quiet. His screen is not. Red numbers stare back at him. He deletes them, types new ones, looks around and says, "If this goes out wrong, I'm done." At Enron, losing is not a mistake. Losing is unemployment. People stop asking, "Is this real?" They start asking, "Will this keep me safe?" And every quarter, the pressure gets tighter, the smiles get bigger, and the truth gets quieter. In the late 1990 seconds, Enron signs long contracts, some lasting 10 years and worth hundreds of millions of dollars. But instead of waiting 10 years for the money, they count all the profit right now. In year one, they book 10 years of dreams. It's like planting a tree today and selling the fruit for the next decade before the tree even grows. Enron doesn't count chickens when they lay eggs. Enron counts chickens when the chicken is still only an idea. They don't sell eggs. They sell the picture of eggs. At lunch, a clerk in Houston checks his retirement account. Almost all of it is Enron. He tells himself it's fine because everybody else is smiling. In the office, the voices split. One person asks, "Has the real cash come in yet?" Another smiles and says, "It doesn't have to." The story is what matters. And someone always closes the deal with, "As long as the stock goes up, no one asks." Every time they did this, the numbers looked better. And every time, the hole underneath them got a little deeper. By the late 1990 seconds, Andy Fastow, Enron's CFO, builds a maze. Not of factories, not of power plants, but of companies. Dozens of them, some say over 50 shell companies. All off the books and out of sight. Billions of dollars in bad deals are quietly pushed into those shells. Here's how the trick works. It is like selling your broken car to your dog, giving him your credit card to pay for it, then coming home and saying, "Look, honey, I sold the car." On paper, the car is gone. In real life, you still own the mess. Fastow creates company after company, so many that even Enron sometimes forgets what it owns and what it pretends not to own. Someone jokes, if our paperwork could talk, it would ask for a sick day. In the office, the voices split again. One person says, "But the losses are still ours." Another answers, "No. On paper, they belong to someone else." And someone always ends it with, "Paper doesn't feel pain." And at that point, it wasn't accounting anymore. It was stage design. This wasn't hiding one problem. It was building a factory for hiding problems. By the year 2000, 2 different games are being played inside Enron. Up top, executives are selling their shares, millions of dollars at a time, quietly and always early. Skilling cashes out about $70 million before the fall. Fastow walks away with around $30 million, while downstairs, people are betting their lives. Down below, employees are told to buy more. A lot of them put almost all their retirement money into Enron stock. One worker says, "I've worked here for 18 years. Every month I add more to my Enron retirement fund. Almost all of it is Enron now. Because my boss said, this company is the future." So I believed him. A small investor says, "I bought because I saw him on TV." Successful people don't lie to people like me. Down below, people are betting everything. People always say, "Don't put all your eggs in one basket." Enron says, "Put everything here. This basket is the future." In a hallway, someone whispers, "If it's so good, why are you selling?" The answer comes fast, because I don't sell dreams. I sell opportunity. And someone always finishes it with one last line. Poor people can't afford to miss out. Every good scam needs one last thing. A gatekeeper who looks away. That gatekeeper was Arthur Andersen, one of the biggest accounting firms in America. They were supposed to be the cops. The ones who say, "No, this is fake." But with Enron, they played 2 roles. By day, they audited Enron's books. By night, they advised Enron how to fix those same books. In Houston, Anderson's Enron team was making about $1 million a week. That kind of money changes how you see things. Someone jokes, when the referee gets paid like a movie star, it's hard to act like a traffic cop. One night, inside an Anderson office, boxes are stacked on the floor. Each box has one word on it, Enron. A junior accountant asks, "Do we really need all of this?" A manager answers, "Just in case, start shredding." The machine wakes up. Paper disappears. The young accountant watches and says quietly, "My dad worked 30 years to save his pension. What if this is his money?" No one answers. The shredder keeps eating paper. In public, Anderson says, "We are independent." Unofficially, the deal sounds more like "don't look too hard" and the checks keep coming. When you get paid to catch a liar, and paid even more to protect him, you don't lose your job. You lose your eyes. August 2001. Jeff Skilling suddenly quits. No scandal. No goodbye tour. Just a letter on the desk, and he's gone. This was a company worth over $60 billion. And its CEO just walked out without a word. The SEC starts asking questions. Inside Enron, a warning memo appears. A vice president writes, "I am afraid we are going to explode in a wave of accounting scandals." Management reads it. Then they say, "Relax. We don't need new numbers. We just need a better story." Someone jokes, when the house is on fire, they don't look for water. They look for a microphone, and for the first time, people stop feeling excited and start feeling uneasy. October 2001. Enron admits a mistake. $686 million in profit was never real. On Wall Street, people start counting and stop smiling. The stock falls from almost $90 to under $1. In 4 months, it loses 99% of its value. Enron calls it an accounting error. Regular people call it, "Hey, where did my money go?" Phones start ringing. Someone drops a cup of coffee. Nobody cleans it. Screens turn red. People stare at prices like they're watching their own future disappear. And for the first time in years, nobody is clapping anymore. December 2nd, 2001. Enron is finished. It files for bankruptcy. $63.4 billion in assets. Gone. Around 20,000 people lose their jobs. In the parking lot, people carry boxes. Some carry photos. Some carry nothing but silence. One man opens his envelope and says, "They fired me today." Inside, a goodbye letter. 2 pages. No apology. No future. No pension. That night, he goes home early. His kid asks, "Dad, why are you home?" He answers, "Because the company is gone." Across town, executives are leaving too. But their cars are nicer. Keys to beach houses. Keys to yachts. Keys to quiet streets far from this mess. Someone says it bitterly, workers get pink slips. Bosses get ocean views. And in one day, a company disappears. But the damage stays. The collapse doesn't stop at Enron. Behind the curtain, other players start to panic. Arthur Andersen, the firm that signed those numbers, starts killing paper. Boxes were everywhere, hard drives on the floor, memos stacked like trash. Shredders run day and night. In Houston alone, Anderson had been making about $1 million a week from Enron. Paper covers the floor. Someone trips on it. Nobody stops shredding. A firm that lived almost 100 years is gone in a few months. 85,000 people lose their jobs with it. Not for stealing, for helping hide the trail. And big banks show up too. They helped build the deals. They earned their fees. They watched it burn. Most of them don't go to jail. They just write checks. Millions in fines. Then, lunch as usual. Someone sums it up like this. Some people lost their homes. Some people lost their jobs. And some people only lost a little money. After the dust settles, Washington finally opens its eyes. In 2002, a new law is born, Sarbanes-Oxley. It tells CEOs, if the numbers lie, your name lies with them. But by then, over $60 billion was already gone. No law could bring it back. That same year, Enron wins a strange prize, the Ig Nobel Award, for most creative use of imaginary numbers. They invite Enron to come and accept it. No one shows up. A company that once begged for applause can't even send someone to take a joke. And the people who lost everything are not laughing. Picture this. A man walks to the parking lot holding a cardboard box. Inside are photos, a mug, and 20 years of his life, all in one quiet trip. Across town, a woman sits at her kitchen table. She opens her retirement account and stares at the screen. The number is almost zero. She whispers, "I gave my whole life to that company." And the room says nothing back. Once Enron said it sold energy, the future, and innovation. But the thing it sold best was trust. And trust always costs more than people think. Because when trust breaks, it doesn't fall on the people at the top. It falls on the people who believed. The people who lost everything went home quietly. Some of the people who caused it went on stage. They sold books, they sold speeches, they sold success. Enron sold trust. Ordinary people paid. When humans want to believe too badly, they stop asking. And when nobody asks, any stage can stand for a long time, while the believers go quiet and the sellers keep talking until the lights come on.